Welcome back. AlixPartners Annual Disruption Index showing that CEOs have a number of concerns as we head into 2024 and souring their outlook. 54% say they now expect a recession in their national economies in the next 6 months versus 1/3 of executives overall. And among the top worries driving sentiment is the upcoming U.S. presidential election, with 66% of CEOs saying they're worried about what the impact will be on their companies. Joining us now to break down these numbers is AlixPartners CEO Simon Freakley. It's great to have you on.
Thank you, Sarah.
So you poll 3,000 CEOs,
executives
around the world. The expectations around recession seem high, especially given the sort of market view that we're going to have a soft landing.
You're right, but of course the sentiment in the US is feeling more positive, isn't it? People are thinking maybe, in fact our survey shows that probably 1/3 of CEOs in the US think there'll be a recession, so 2/3 don't. But around the world in the major economies, over half of CEOs are expecting a recession. So globally the feeling isn't as positive as it is in the US.
Which explains it. What else are you sensing as far as CEO concerns at the moment? Geopolitics has to be pretty high.
Exactly. It's so interesting, Sarah. The two big insights from this survey in terms of narratives are, number one, the world is just as disrupted today as it was 5 years ago when we started this survey. You think, how can that be? The pandemic happened in that time, but actually it's just as disrupted, different issues. Number two, what comes loud and clear from the survey is CEOs are doing a better job of running their businesses during disrupted times. So whether it's geopolitical, China and the West, what's happening with Ukraine and Russia, what's happening in the Middle East, whether it's artificial intelligence, the multiple disruptions that are happening, CEOs are doing better than they were.
How? What are they doing that's different?
Well, I think part of it's temperamental, Carl. I think that they've got used to operating in highly disruptive times. Years ago, people were worried about the economic cycle. Are we going from boom to bust? And federal banks and governments were getting better at controlling these long economic cycles. The cycles of disruption now are quicker, they're more disruptive, and they layer on top of each other. So it's a choppy sea rather than a rolling sea. CEOs have just got used to it. They're used to sailing in choppy conditions.
We hear that a lot. I'm thinking of Chuck Robbins at Cisco is a good example. And not just that, but the idea that the people who are now running companies grew up in that kind of accelerated environment when they were more junior employees.
Yeah.
And now they're in charge.
That's true, but it's a bit like a sort of tall skyscraper. If you're the CEO right at the top of the building, you feel the sway of the building. If you're at the bottom, and you're far away from decision making, it feels solid. The CEOs see the disruptions in a way that maybe executives lower down the business don't, but they're getting better at managing them.
The one thing I find interesting is the views on climate.
Yes.
And how climate policy is getting more complicated, and not just in the United States.
Yes.
Right?
So climate is still very much up there at the top of the agenda. And of course, it's not just climate, but things like energy transition. What does energy transition mean for your industry and your business? This is still very much a board topic and top of a CEO agenda, along, for instance, with artificial intelligence, which, interestingly enough, in our survey, came out as being the #1 opportunity rather than the #1 disruption.
I was going to say, how much anxiety is there around AI and keeping up versus opportunity?
I expected to see it being as the biggest challenge, but actually it wasn't the biggest challenge. They see massive advantage. Now, one of the privileges I get with my job is I'm speaking to CEOs of our clients every day. And early on in the AI discussion last year, people were looking at efficiencies. How can they become more efficient using AI? That narrative's now moved to how do we drive growth using large language models and artificial intelligence tools? Revenue growth, of course, being the principal driver of equity growth. All of a sudden, the narrative is more than just efficiency.
And yet 60% of them are worried about losing their job.
Well, it's interesting. That's down on last year. It was at least 10 points higher last year. It's not that they're not anxious, and maybe by definition the pressures on a CEO keep them anxious, but actually they're feeling a little easier than they were a year ago.
Maybe because of the economic environment changes?
I think it's a mixture of things, but certainly now more optimism in the US, a sense that we're going to avoid a hard landing. Interest rates are still high, a big issue. Supply chain disruptions, Panama Canal running out of water, Suez Canal being blocked because of pirate activity. Still some really serious business challenges, but people are just better at managing them.
Do you think the flow of information, we see this on social media a lot, feeds anxieties unnecessarily, even at the C-suite?
I think absolutely it does, and the news cycle, whether it's in social media or more traditional sources, I think it keeps anxiety high. And yes, the best CEOs, which of course are a proxy for the best companies, the thing that marks them out is they don't wait for perfect information. They do it nearly right, but do it now. They move to action quickly. They're their own chief communication officers and explain what they're doing and why they're doing it. And then they don't hold themselves a hostage to a prior strategy. And I think this is the only way that the best leaders manage in this anxious cycle of fast-moving news and events.
So what is the upshot, Simon, given all of these findings? Sometimes we look at business and CEO confidence to see whether we're going to get M&A or hiring or,
Yes.
it directly impacts the economy. What would you say are your takeaways of where we are now?
So where we are now, I think, is that people are feeling better about the labour market. I think the skills shortage that we saw profoundly in the last couple of years has eased. I think they're feeling very anxious about how to understand what AI means for their company and their industry. So one of the bits of advice I give to our client CEOs is really take yourself to school on AI so you understand what it means for your business and how you recreate it. Over 90%, Sarah, of the CEOs polled in this survey said that they needed to fundamentally change their business models in the next 12 months. And AI is going to be at the root of that.
That is a big change. Simon, thank you. It's a really interesting survey. It comes out once a year from AlixPartners. We appreciate you coming and sharing that.
Thank you, Sarah. Thank you, Carl.
Good to see you.